I'm going to teach you how the market works in simple terms in 10 minutes. So let's get started. The first thing you want to understand is that there's only three scenarios. You can have the inside bar scenario, which is going neither up or down. It is going sideways. And therefore, it is an equilibrium or a consolidation. You can also have a scenario 2, up or down, and this is a trending or directional move. So if you're looking to be a trader, you're looking to trade 2s. Unless you're trying to sell options, then you're selling options during 1s. The next scenario is a scenario 3, which is a failed 2 that becomes 3. So it must be 2 up and then red, which is failing, and then go 3, or 2 down and then green, which is failing, and then go 3. You'll notice when this occurs, it is also going to be considered an outside bar. This has a magnitude or a target, because when a 2 fails, it's trying to take this out to the upside. And if a 2 up fails, it's trying to take this out to the downside, that previous bar's range. So this is how we gauge where price is going. The next thing is time frame continuity. We must trade in the direction of the most 2s and failed 2s going 3 across 4 or more time frames to have a lot of evidence for our trades. So the 60, the day, the week, and the month, or the standard time frames. So notice on the month, we always start at the biggest. It's a 2 down, but it's green. So what's it trying to do? Scenario 3 by taking out this bar's high, going outside bar. So we have a target. If the week is a 3-2 to the upside, it's going up this week, 2 up. If the day is 2 up, it's going up today. And then if the 60 is 2 up, it's going up right now. So when we look at this, we can gauge participation by price and time, saying the monthly guys are buying, the weekly guys are going up today and buying, the daily guys are buying, going up today, 60 guys are buying, going up right now. So when that's the case, we have no reason to believe price is going down because it's going up. It has to be. And then the third thing you want to understand, the third universal truth, is the broadening formation. Given the scenario 3 occurs, we know the broadening formation is a universal truth of how price works. So what a broadening formation is a scenario 3 on a lower time frame. You will see this red box here. This is a 3. It made new highs and new lows to all these previous bars. That's a broadening formation for sure. So the broadening formation is where it's going to start small, low, high, low, higher, low, higher, high, and then eventually they will expand because it is called a broadening formation. It gets bigger over time, which tells us how to gauge magnitude. Because if it's scenario 2 fails, it's trying to go 3. So if we reverse at the bottom of a broadening formation, it's trying to go 3, which means it's trying to go up there, right? If we reverse at the top here, it's trying to go down there, right? So hopefully that makes sense. And this is also drawn on previous range. It's not drawn in hindsight. It is drawn as this has occurred, because you can draw this broadening formation out before price even reverses right here. So you can gauge the magnitude before it occurs. Unlike most patterns where you do not know if they have worked until they have worked, like a head and shoulders, it can be successful or unsuccessful. Since a scenario 3 can't change into anything else, once this 3 happens, it's drawn, right? Like it exists. It's never going to change because the price is already traded and caused that to occur. So this is not hindsight. This is actually the only pattern that is foresight or happens before it plays out, if that makes sense. So since we understand the scenarios and the broadening formations, let's quickly understand how to draw them. So once a candle is closed, we redraw the broadening formation if we can, right to left, to be objective. And it's based on previous range, not current range. So you'll notice there is no broadening formation in here. They made a high, they made a low, there's no higher highs, nothing. And then we make the low and then the slight higher high to this bar's range here. Now we have a broadening formation. We can draw right to left. And then notice it continues. So we redraw right to left. It's grown in size. And then there is a 2 up followed by a 2 down. So price has reversed. Where's it going to go? It's trying to go down to the bottom of the broadening formation. Then if it does that, you'll see it goes down there and we redraw again. And then it reverses with an inside bar, and then it goes up, and you can gauge the magnitude to the other side. So see, this is drawn out before it reverses. It has to be. It can't not be done this way. And that being said, when we look at the reversals, what do they look like? Well, they're going to look like this. You can have an inside bar reversal, 2-1-2 or 3-1-2. You can also have a 2-2 reversal, 2 down, 2 up, or a 2 up, 2 down. These are the most common reversals. You can also have 3-2-2s, 1-2-2s, and then the scenario 3 by itself is a reversal. You can also have a 3-2 reversal. So just knowing a 2-2 reversal and a 1 reversal, you can make a ton of money trading. Let's show you. So if we go to the charts, we want to understand first, since we use multiple time frames, we must start at the higher time frame. And since this is not hindsight, we will see things as they set up. So a winning long position is going to look like this. You make a new low, starting the broadening formation. So a lower low, followed by a reversal. This is a 2-2 reversal with the actionable signal of a hammer. And the entry of a 2-2 reversal is here. The magnitude of a 2-2 reversal is to take this out up in here, giving us a target. It also tells us if it's going in that direction, we're going to try and take these guys out as a target as well. So when this occurs, we can see the signal, and that's when we draw the broadening formation right to left, like this and like this. So drawing on previous range, not on what has occurred here. So once that reversal is starting to occur, what we want to look for is this exact same thing on the day, the 60, the 15, the 5-minute charts, confirming the direction of this reversal on the month, trading with the direction of that monthly too. So when we go to the 60-minute chart, since we know where price is going, it's trying to go up there. Any triangle out or any broadening formation that sets up to go back higher is an entry long to confirm the month, and you will have a lot of evidence for that to work. So what we wait for is this. You'll notice they slight higher lows, new highs, and then they reverse, come back in. You'll see they stop these people out. Anyone with tight stops jammed up in these lows. So you make the lower low. And then that is followed by the inside bar 3-1-2 reversal right here to enter into that position. Like so. So instantly, this confirms what the month is doing. Up they go. And you gauge the magnitude how? Drawing right to left, because this is your broadening formation. They go up into the broadening formation perfectly. And then you will notice, once they're up there, there's some profit taking. Then they make another lower low. Slight lower low to this. Then it goes 2-2 reversal here. Where's it going? Higher high to that. You can use that broadening formation to gauge the magnitude properly, like so, and then up they go to the penny. And this is going to happen over and over and over because price eventually must stop people out, or it eventually must make a lower low because price will trade in a series of new highs and new lows. Trend has to make new highs and new lows, and since price trends, that's what it's going to do. And you will see the lower low in here plus the 3 outside bar reversal, broadening formation, then they expand it, getting bigger. And you can see it's much, much bigger. And then in here, you're going to see the broadening formation in here, drop it into the lows of this thing. We can draw right to left, slight lower lows to this, followed by, this is important, the compound inside bar reversal, where this inside bar breaks and it's nowhere near taking this out. So it takes multiple bars where they consolidate. And then once they take out the bar that caused the inside bar, we call it the mother bar, right up in here, this is where you want to see that break start going because this equilibrium or this consolidation, this one, is resolving higher, 2-1-2 reversal above that. And now they're going to the highs up there, and you'll see up they go, and there's your target on the month. So hopefully this is making sense. Let me show you another example. If we go to Lulu on the daily chart, you will see this. Or actually, we go to the month first. The month, you'll notice the inside bar signal forms up here. We draw right to left, and this is something I posted to Twitter. Down they go, almost to the penny there. But I want to go to the daily and show you what we have done today and last week. You will see the 2 up and red, so we draw right to left. That's your higher high. The 2-2 reversal occurs below this. Your magnitude is to take this out, and then you'll likely take this and potentially that, which they did. They're close nearby pivots. So on the lower time frames, we then go to look for what? The same exact thing, because price is fractal, it's going to occur everywhere. We go up, slight higher highs, the 2-2 rev strat, 1, 2, 2, and then boom, blast off, and you see they take out all the pivots in one go, stopping guys out. And then you'll see the broadening formation. Notice they stop some guys out, 2-2 reversal, and then down they go all the way. But I want to show you this on the daily chart. The same 2 up in red pattern gave us money today. You get the slight higher high to this, followed by 2 up in red, reversal, 2-2 below this, with a magnitude on the 2-2 to take this out, 259.53 to cause the broadening formation to occur. If we go to the 15 in here, you will see the same exact 1-2-2 rev strat this morning, and we called this out in the morning like so. There's your higher high. The shooter 2-2 reversal, actionable signal, down they go. You will also see on the 5-minute, this occurred to confirm that signal on the day. Right here, the slight higher high, and then followed by the 2-2 reversal. You'll also see it in here, the slight higher high, followed by the inside bar reversal. And notice how you just go after it. You know exactly what's going on. So hopefully this makes sense, and you can see this is happening over and over and over, and this just has to happen. This is how price works. If you'd like to learn more, check out the other videos on my channel. Drop a comment below if you liked it, and I'll see you guys in the next video.